please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me are Anuj and Sonia. Well, ICICI apart, first for us the positives are that the global markets are starting with a positive hue despite what we are going to expect from President Trump later on today on Iran. Global indices are ignoring that sharp uptick and they are still higher, largely higher even in Asian trade. The second positive is all that you heard from Chanda Kochar. Now the Nifty bank is not standing just on the private sector retail banks. It has additional legs and partly that is Axis and now it's quite fully ICICI as well. So Nifty bank becomes a strong propeller for the market. On the negatives, even if the world takes oil lightly, India cannot always take oil very lightly. It can be a near-term destabilizer, though of course the situation is very different from 2013 with reserves being very strong and we have an inflation targeting reserve bank that puts the entire domestic scenario much stronger in terms of macros. And of course the other negative which we just learned is that the mutual fund inflows have been a little lower in April, about 12% lower in April compared to March. That is a bit of a jar because it was the domestic mutual funds who were providing the liquidity. So now it's a question of which trumps what. Is growth going to trump oil? Will the confidence in earnings trump the temporary setback in liquidity? That's what the market's going to tell us today. Good morning.
Hi, good morning Lata, good morning Anuj. I think on ICICI Bank, no bad news is good news. That's something that perhaps the street will take with both hands, right?
Well, all the bad news is out. You can't really say no bad news is for the future quarters. Yeah, that point is taken. But for the moment, it does look like all the bad news is out.
So at least that's one more positive that the street would look forward to today. Also, the domestic data, the cash market buying was quite good. Almost 1,100 crores of buying by the domestic institutions. That's something that the street will definitely like. Anuj, morning. So the bulls have become a bit more confident as we saw yesterday. Do you get a sense that this buy on dips strategy that perhaps worked over the last few days is something that could continue?
Morning, Sonia. Frankly, I'd just like to rewind the clock 24 hours back. This was the call for yesterday that, the market is sensing something. And for me, the market is the biggest opinion poll. Right now, this market's mind is focused on what's happening in Karnataka. And that, I think, is the big trigger. So, for me, it was not surprising to see a 100-point rally yesterday because it happened after a false breakdown. Look, when you have a false breakdown, which is that on Friday it looked like the market had broken down, the mid-caps had corrected, all the weak hands were out. And that's why yesterday you saw that big move. For us, now it's about macro headwind versus micro tailwind. The last 3 or 4 results have been quite good. Exide, for example, yesterday was really good. We spoke about it, 10% intraday rally. The problem is, yesterday when you started trade, you had a lot of short positions. You had the market positioning on your side. This morning when you start, and if there's a gap up, after a 100-point rally, the risk reward is not in your favor to buy. Now you have to wait for intraday dips to buy. What would be a good dip? Perhaps a move towards 10,680 on the Nifty. That would be a good buying opportunity. And your stop would be very close, 10,650, yesterday's low. I think that presents a beautiful trade. If you look at the bank Nifty, 26,000 is now possible, perhaps before this expiry. But again, you'll have to wait for a bit of a dip. I don't know if the dip will come because ICICI Bank, if it opens 2-3% higher, other banks also open higher. In that case, tough to see a dip. But that's, of course, your trade management. So you need to wait for, say, a 100-point dip on the bank Nifty before you buy. But the texture is firmly buy on dips. And, this if you take out the previous high or the series high, in that case, there's a good chance that you have one more rally. But the market will price in a good outcome before the Karnataka elections. And after that, the only way the market can react actually would be if there's any negative surprise, because positive surprise, markets normally tend to price in positive surprises ahead of mini binary events. So let's see. But for now, I think yesterday's move has once again reiterated that this is a buy on dips market. And if you're selling this market or shorting this market, you are making a bit of a mistake because the larger trend is up and the market hasn't given any indication that that trend has changed.
Yeah, and actually now the market is walking on several stilts. You will have the bank Nifty now quite clearly turning a little more positive because you have ICICI and Axis added to. Originally, it was only those retail banks, Indices, Kotak and HDFC, which had to bear the cross of growth. You also have, because the rupee will inevitably weaken because of crude, the positivity in the IT sector, which is already playing out. Now, the metal stocks, it's not just crude. Even the other commodities are rising, and we saw that yesterday. You know, among the big gainers were the metal stocks. So metal could be another tripod for the market to move up. That's why it looks like this market now stands on more than just one stilt.
Also on crude, you know, today is an important day because Donald Trump will take the decision on the US sanctions against Iran. And a lot of people believe that maybe he could kick the can down the road and not take that decision now, maybe defer it till the Korean crisis is resolved. So if that comes through, we've already seen a little bit of downtick in crude. Let's see how the rest of the day shapes.
That's actually a complex problem because it will also depend on how the Europeans react and whether Iran can sell to Europe.
Yes.
So as yet, it is something whose details we still have to realize.
Okay, well, let's do one thing. Let's take a look at what our wise experts have to say as we head into trade this morning. Vinod Karki of ICICI Securities says Indian equities are relatively resilient, although its currency and bonds are among the top losers within emerging markets during calendar year 18 so far. He says above average valuations and an absence of catalysts in terms of earnings upgrade cycle or large policy announcements will continue to keep Indian equities in a range in the near term.
Okay, money market views for you today. Bhaskar Panda of HDFC Bank says crude prices globally are making new highs, bringing more pressure on emerging markets. He says tightening US yields and surging dollar index also is pushing emerging market currencies. And if we add local factors, we have a cocktail of factors responsible for the recent rupee weakness. Today, he expects the USD-INR pair to remain above the 67 per dollar mark and trade in an intraday range of 67.10 to 67.30.
Okay, he also speaks about the bond market. The 10-year benchmark yield has been rather tame after the recent OMO announcement, and he doesn't see any fresh factors as of now. He expects the yield to remain range-bound within 7.60 to 7.65% for the day.
Okay, good day for US market. Good follow-through, actually. Here's Mangalam with the world view.
Yes, the US markets did end in the green. However, remember, they were off the session's highs. So the Dow, which was at 1 point higher by about 200 points, ended higher by about 94 points. The Nasdaq, though, posted 3-day winning streaks. So the reason why the Dow was off highs was another instance of Twitter before ticker, because Donald Trump tweeted, he said, I will be announcing my decision on the Iran deal tomorrow from the White House at 2 p.m. That is the US time. So tonight, we will be watching out for any decision coming in from there. As a result of that, we saw the crude oil prices slip a little from 42-month highs. Still, the Brent is around that $75, closer to that $76 mark. Bitcoin, that one was just about to touch that $10,000 mark, wherein we got comments from Warren Buffett, Charlie Munger, and Bill Gates. They've criticized the Bitcoin. Warren Buffett's actually call it rat poison squared, and that caused the Bitcoin to touch about 9,200. Across the Atlantic, if you take a look at the European markets, the CAC was an underperformer there, sitting with a gain of about 0.3%. The German index sat with a gain of about 1%. The FTSE was shut yesterday. Nestle, one stock that was up about 1.5% after it announced a global tie-up to sell Starbucks products outside the Starbucks stores. And the other one was Air France. We keep talking about Air India. Air France was down 10% yesterday because the French finance minister said the government will not bail out Air France. So that one was the one which led to the underperformance of the CAC. Oil prices, while they're off the 42-month highs, they're still higher, and that is what took the Russian markets higher by about 0.6%. The Asian markets, on account of the strength in the dollar, the Nikkei is in the green. Majority of the Asian markets are in the green, and the SGX Nifty too, again, for whatever it's worth, indicates about a 20-point uptick at the start.
Okay, well, thanks a lot for that. You know, let's focus a little bit on oil. As Mangalam was telling us, later tonight we'll get to know more on the US sanctions against Iran. Jonathan Barrett of Ayers Alliance joins us from Sydney. Jonathan, good morning. There is some talk that Donald Trump could sort of, you know, kick the can down the road and perhaps put that decision on hold. What's your own view on how to approach oil from here?
Good morning. Look, I would like Donald Trump to kick the can a little bit along the road, but he's certainly a man that likes to be on his Twitter and certainly a man that likes to do headlines. So I get a sense that that I think a decision will be made. You know, I think if a decision is made and the sanctions are imposed, then I do think we've got a concern that oil will continue to trade higher. So yes, I think there will be a decision that'll come out. It's what he's been thinking, it's what he's been telling us. and I think that decision would be adverse to the oil price.
Okay, what are you pricing in case he were to announce sanctions what against Iran? What are you pricing in terms of crude? Does it go towards 80 or doesn't get quite there?
I think it does. I mean, it's going to be in the wording, because I think when Donald Trump will come out and say something, he'll either say something to the effect that, you know, we've got to be hard, we've got to do something. But I think at the end of the day, he will also come up with some action, but then I think he'll sort of turn around and say, well, look, you know, it'll come into effect X, Y, Z. But I think when I look at the price, I think you can see a good $5 to $10 rally. But remember also, there are other instances out there which are also supporting prices. This is just one of the many, many factors.
In fact, the other instances include the European allies, right? They've the guys who helped secure the deal are sort of urging Trump to continue putting it in place. How do you think all of that would work out?
Look, I think at the end of the day, there's a lot of pressure there, and also a lot of pressure from Israel as well. So, you know, there's a lot of face if he does come down. So I think it's going to be a decision that will support his allies. And I think at the end of the day, that's why we'll see. Has the market already rallied? I mean, that's the question. Buy the rumour, sell the fact. You know, and will we see, once we know the outcome, then we know exactly how to trade with it. So I think given the allies, you know, given the support that they want for him to come out with the sanctions, you know, I think that it could sort of build itself. But look, at the end of the day, we've still got things out there which are a concern. You know, obviously we've got OPEC there, and also we've also got the amount of demand that the IEI is expecting this year to increase. So the other factors I think are supportive, even if we do get a negative reaction from Trump.
Okay. No, can you still leave us with a bit of a range? Do you think 75 now is completely supported? Or do you think, you know, even 75 can be broken and we can see things lower if Trump is not so severe?
No, I think at the moment, given the trend is still higher, I think that you will see prices, you know, 75, 80 US dollars. As to how long it stays up there will depend on the dynamics that we're talking about at the moment. And I think that's the key. Remember, OPEC and non-OPEC issues have actually restricted supply. And if you look at the ceiling of their production, it's way below where they should be. Now, that's something we haven't really seen for many, many years. They normally overproduce. So when you look at the dynamics, they're still supportive, even if we do get a dip, that prices will continue to trade higher. And that is a concern, a real concern I feel for the oil price.
All right, we'll leave it at that, Jonathan. Thank you very much for joining us. Well, broadly, we have to take it as between 75 and 80 for us, depending on what decision comes from President Trump, and that'll be 11:30 p.m. our time. It's 2 p.m. ET time. Well, let us remember that for us, it is going to have an important bearing on macros. It can add to inflation. It can deduct from growth by a few basis points, and most importantly, it can immediately destabilize the macros a bit, both the current account and the fiscal deficit. So we have to keep that in mind. And at the moment, although we are paying more for crude, we are not exporting enough. Usually, when crude rises, our destination countries buy more from us. This time, something's gone wrong with Indian exports, that some of them are not yet firing up. So that's a bit of a bother.
And as Jonathan said, whichever way the sanctions go, crude is heading higher in the near term. So I guess that's a spot of bother anyway. Let's do Bazaar morning call. We wake up this morning with positive cues across the board. So the Asian markets are actually looking quite good. The Hong Kong market is now up almost 350 points. And the sector to watch everywhere is technology stocks. 3 days running now, they've done well across the US. Even stocks like Samsung, etc., have risen about 2-3% in the Asian markets. So let's see how things play out for us. But here is the list of top 10 stocks to watch for the trading day. Our entire team is here. Hi guys, morning. Anuj, what are you looking at?
So Sonia, you know, I discussed it in closing bell also yesterday, but really the stock to watch for me now is Exide. 5 times jump in delivery volumes yesterday. And this margin surprise, because that was one number which was, you know, keeping the stock under pressure. If you see 12th May 2017, the stock was trading at 245, and yesterday at low it was trading at 245. So it's been a one-year consolidation. And when stocks break out after one-year consolidation, on positive one-year consolidation, on positive news, normally they, you know, keep on rallying. So, of course, in the morning it could perhaps dip a bit because already a big rally took place yesterday, but that would be interesting. The other stock, I discussed it some time back as well, Kotak Mahindra Bank, the strongest banking stock of last decade. It's seen some consolidation and some correction from its highs, but over the last 2 or 3 days, big pickup in delivery volume. So could be interesting to see if there's any follow-through buying in Kotak Mahindra Bank.
Also, next I just want to make one point. The highest margin since Q1 of FY18 at a time when everyone's facing higher lead costs, to manage them effectively with cost control measures. I think it's an art that the street would sort of take with both hands. All right, but ICICI Bank, how to approach that?
Yeah, I'm wondering if some of the money that's been going to Kotak and banks like that will actually come to ICICI now, because it's the risk reward is clearly in favor of buying the stock. Just quickly for the results. It is, of course, the highest quarterly slippages at 15,300 crores. But the point is, it is also the lowest residual stress in the past probably 3 years or so. Important point is all the loans came from the known list, what they call the drill down list. Others call the watch list, but it has come from that list largely. Loans which were under the various RBI dispensations like SDR and S4A. This has largely come from there, and the leftover stress is less than 2% of less than 3% of the total book. So bad news can't get worse than that. And the important point is it's coming with growth. Loan growth not bad at all at 10%, more than 20% growth actually in retail loans, which are maybe a tad safer. But important point is also that low cost savings, as in Axis's case, the current and savings account have grown much faster and now form over 50%. Over half the sources of fund come from low-cost money, and that's improved the margins. Now it looks like margins have bottomed, and they're actually 10 basis higher than the previous part. So the short point is, now perhaps you will start looking at ICICI from the next quarter onwards, not in terms of what is the asset quality. That used to be the headlines for the last 8-10 quarters. Now you will start to look at what is the growth number. Yes. That itself is a very big change in attitude. But I think we should go over to Abhishek to get the brokerage's verdict. Abhishek?
Well, Lata, the brokerages are clearly positive on ICICI Bank ports its numbers. They say that the valuation is cheap when you compare to other private banks. So ICICI Bank trades at around 1.4, 1.5 times, on a forward basis, price to book value, while peers trade at least at 2 to 2.5 times on a forward price to book value. Balance sheet cleanup is very positive, and the normal NPL slippages formation, that is, apart from the stress portfolio, is now at stabilizing and is positive. According to my calculation, it's around 3,500 crore, and that is stabilizing over the last 2 to 3 quarters. Brokerages are positive. Entire list of brokerages that I have a buy or an overweight rating like CLSA, Morgan Stanley, Nomura, etc. And the target price ranges from 350 to 425 per share. Back to you.
Okay, thanks for that. And now to go to IT. Cognizant's impact. Rima, how would you read it on Indian IT stocks?
Well, I don't see too much of an impact in the Indian IT stocks, but just a quick word on Cognizant's numbers per se. The stock was down over 5% in the US markets overnight. 3 misses. One, while the reported Q1 numbers were in line, if you adjusted for the company's new revenue recognition policy, then the adjusted revenues, margins and EPS would be lower than estimates. Secondly, Nomura believes that there could be an effective cut in the company's upper end of the guidance. So what the company did is tighten their revenue guidance band to 8.4 to 10%. The earlier guidance band was 8 to 10%. So but the new guidance also includes the acquisition that they did, Boulder. So because of which the lower end of the guidance was increased by 40 basis points, but they didn't increase the upper end, which basically means for the organic growth, the upper end of the guidance was cut. And thirdly, their FY18 EPS guidance was also cut, but that was largely on account of higher taxation. So the impact on Indian IT, I don't think too much, because the company in the conference call spoke about modest spending in the large US banks, a weak retail. These two factors have already been flagged off by the Indian IT names. But given Cognizant was down 5%, there is a possibility that even the large names might see a sentimental negative impact.
Okay, thanks a lot for that, Rima. So no great impact coming in from that. But let's find out what the other numbers look like. Tata Coffee came out with their numbers post-market as Mangalam Hot Brew.
Not really, Sonia, actually. A poor set of numbers, flat if you must, flat white, bad coffee, because if you take a look at the revenue, that one grew by about 9.5%. The EBITDA, that one was down by 67%, and a net profit decline of 86% is all but erosion of the complete net profit of the company. And majority of that, in fact, all of the EBITDA decline has come in on account of lower realizations, higher cost of production, and lower volumes, which is explained by gross margins, which came in 22 percentage points lower. 44% versus 66%. So the management attributed this performance to abnormal and extreme weather conditions, unseasonal rain. So that is something we'll watch out for. And another, the only silver lining, if you must, is their 8 o'clock coffee, which is the value-added product. That saw a 30% growth, $39 million as against $30 million. So the stock is down 30% from its 52-week high. It will open in the red. Let's see at what level do people start finding value in Tata Coffee. But today, decaffeinated.
Oh, yes, Nagaran. Thanks a lot for that. Tata tea is far better brew than Tata Coffee. I mean, I can tell you that. That's always preferable. But PNB Housing, now that supply issue always keeps coming back on this one. Rima?
Yes, Anuj. Sources tell CNBC TV 18 the private equity giant Carlyle is looking to offload 80 lakh shares of 4.8% equity in the stock via a block today and raise about $150 million. The floor price has been set at 1,280, which is a 7% discount to where the stock closed yesterday. So a combination of supply as well as a lower floor price could put pressure on the stock. After this sale, Carlyle will still be left with 32.5% stake in the company.
Okay, thanks a lot for that. So PNB Housing is in focus, but let's move on. The impact that oil would have on a whole host of stocks. Lata.
Well, we've seen this play out time and again, but today you should expect that ONGC would do well, but HPBP IOC will not do well. Now things will start hotting up a bit because it's difficult to let oil companies pass on the prices beyond a point. It's also difficult for the government to take the hit immediately since GST revenues are just about improving, not entirely recovered. So again, like ONGC, positives are Bazaar Offshore and Dolphin as well. You could see a little bit of a jar on paint companies and of course on airline stocks.
Okay, but let's wrap this up with some more stocks that are in the news this morning. Sonal, what do you have for us?
Well, I have some results and most of them are red. So Trident, starting with Trident, weak set of numbers again. Revenue was down 7% because the cotton prices went higher and also because of some GST issues. That led to profit falling down by around 49%. Expect that stock to be in red today. Tube Investments, another weak set of numbers. The revenue went down by 4.5% because segment-wise they saw a big dip in revenues in cycle and accessories vertical. Also, the profits came in down by 57% because there were profits hit by exceptional loss due to impairment of investments in the joint venture. Pfizer, however, reported good set of numbers. The EBITDA went up by 38% and the profits also went up by 54%, and sales from continuing business was up 21% on a YOY basis. Expect that stock to be in green today. Shalby reported weak set of numbers. Though the revenue growth was strong at 30%, the margins came in lower by 600 basis points at 14%, and also there was a tax write back of around 7 crores because of which the profits looked higher, but expect that stock to be in red today. Another stock that is in focus is Tata Metallics because the management informed the exchanges that there is no production at Kharagpur plant since yesterday because of a strike by the workers, and company is in discussion with representative of contractors for the resumption of work, but till the time that happens, I expect the stock to be in red today.
Okay, thanks a lot. So that's the synopsis of all the stocks that you need to be prepared for as we head into trade today. Here's a quick recap then. Expected to gain are names like Exide, Kotak Mahindra Bank, there is ICICI Bank, Pfizer, ONGC, Bazaar Offshore, and Dolphin Offshore, while a couple of stocks that could be under pressure this morning: Infosys, TCS, Tata Coffee, of course, weak numbers, PNB Housing, Trident, Tube Investments, Shalby, weak numbers, Tata Metallics, IOC, BPCL, and HPCL.
All right, that's the list of red and green that you probably should be prepared with. But there is some additional news which you just have to keep on the radar because these stocks still trade a lot. This is the latest developments on JP Infra, many of them from other reports. Anisha.
Well, yes, Lata, Ritu has been keeping us updated with what is happening as far as the Committee of Creditors meet is concerned, and now we are getting reports that actually Mr. Manoj Gaur, which is one of the promoters of the company of Jayaprakash Associates, had made a presentation regarding a revival plan to the lenders. Now, this revival plan had a total value of around 10,000 crores, which was being offered via a combination of land as well as equity as well as cash inflow into the company. Now, remember, this is 25% higher than the other bid that the creditors are really considering because that is around 7,500 odd crores that Mr. Walia's Lakshadweep had really put in. But now we understand, and this is the latest report that we are getting, that the lenders have actually rejected what Mr. Gaur had presented. Now they are saying that this is not allowed as per the rules of insolvency and banking regulation, bankruptcy code, and that's the reason they have rejected this offer. Now they're expected to go ahead and discuss on Walia's offer regarding the Lakshadweep offer that they had, and the result is expected over a couple of days. So that is just an update that was coming as far as JP Infratech and Jayaprakash Associates is concerned.
Okay, all these are reports. Thank you very much, Anisha. Not individually confirmed by CNBC TV 18.